Good evening to all of you beautiful people, and welcome to Getting Real with Paula. This week, we are talking finances and more specifically, credit card 101. For most of us, COVID 19 has created some level of anxiety with respect to our finances. So, our intent in this segment is to provide you with the information you need to make the financial decision that best supports you and your loved one in this current economy. My guest tonight, Mr. Vita King, is a credit specialist with 10 years experience in the banking industry. His mission is to educate individuals, families, and businesses to understand, manage, and leverage the power of credit so they can be in control of their financial situation. Without further ado, let's start our conversation with Vita. And a quick reminder to all of you, you can jump in to the conversation and send your and send your question either via the comment box of this live, and we'll see it and we'll be able to answer the questions as per your interest. So are starting now. Vita, can you tell us a little bit about who you are, what you do, and what originally kindled your interest in this specific topic?
All right. Well, thank you very much for having me on your show. It is a pleasure to be on your show. So my name is Vita King. I am a credit specialist and a business strategist. So what I do is I educate individuals, families, and business owners to understand, manage, and to leverage their credit rating if they wanted to start a business, so that they can get the funding to start the business. So that is a little bit of background about me. Now, my 10-year experience is actually that's my 10-year experience in doing business in different industry. In the banking industry, I've worked in several departments in disputes, in accounts receivable, or AKA collection. So I do have a lot of knowledge when it comes to credit and how the whole credit system and credit bureaus work.
So you haven't answered one of my questions because I'm curious. I'm sorry. I'm curious. What kindle you interest in this topic?
So, okay, so what kindled my interest? So what kindled my interest was that, right? So a lot of the time, even people that are working in the bank industry, right, they don't really know a lot about credit, right? So I was working in the banking industry. There wasn't really a lot when it came to credit. Only certain departments really understand credit. So what really kindled my interest when it came to credit was this. Um, all right. So I had, just like everybody else, I had to go through the trial and error, right? I had bad credit, right? I had to
Mm-hmm.
fix it up and actually get it to a point where I understood it. But there was a situation one time where I actually missed a job opportunity because I had bad credit. Right. So I wanted to get
Oh,
into the
okay.
banking industry. So that is the first lesson for everybody. If you want to get into the financial industry, your credit has to be right. So I actually missed an opportunity to get a job in the banking industry because I had bad credit. But even then, it still didn't really, I didn't pay much attention to it. I just let it go. It wasn't until I started fixing my credit and then I started realizing that uh, financial institution, especially the financial institution that I'm with, they started offering me credit. So they started pre-approving me for financial
Mm-hmm.
product credits, line of credit, and all that. So I was fascinated by that. I was like, "Oh, this is interesting." Right? In a span of 1 month, I was able to fix my credit to a point where it was actually now good and excellent. And then the banks just started offering me pre-approval. So to me, that kind of kindled my interest. I'm like, wow, that is interesting. I've been with this bank for almost 10 years and they never even looked at, they never paid attention to me in that way. But now that all of a sudden my credit
Mm-hmm.
has, I fixed my credit, now they started bombarding me with all these offers pre-approval. So that's when I started,
Mm-hmm.
really researching and try to understand more about credit. And then it got to a point. Now this is where it really took off. So it got to a point where I understood how consumer credit works, so on the personal side, and then I moved into business credit.
Mhm.
So I started understanding how business credit works. So once I understood how business credit works, meaning that you can have two credit profiles, so you can have a personal credit profile and the business credit profile. So when I understood that, then that's where it really kindled my
Hmm.
interest, because I realized not too many people actually know that you can have two
That
credit
I-
profile with the same financial institution. So on the personal side and on the business side. So that's when I realized, you know what, this is something that not a lot of people are aware of it. So let me get into this credit education to educate people, to really let them know that, there is power in credit if one knows it
Okay.
properly.
Uh, it's interesting because to me, I can hear the passion in your voice as you're talking credit. And a lot of people are like, oh my God, I don't want to look at that. I don't want to deal with that. So I think you're the right person to bring that conversation forward. As some of us might be young in terms of financial literacy, can you explain what's the purpose of the credit? What is a credit report? And what is a credit score?
So the purpose of credit is really to establish a relationship with your financial institution. That is the main purpose of credit, right? You get a credit card so you can build that relationship with your financial institution. So when you get to a point where you want to, if you want to buy a house or you want to buy a car
Mhm.
or you a large purchase, then you have a credit history. So which means you have a history of making consistent payment on time. And when you get to a point where you want to buy a house, when your financial institution or any other financial institution looks at your past credit history, they're able to approve you for these, for these credit products, or whether it's a house or a car. So that's
Mhm.
really the main, the purpose of having credit is for you to build a relationship with your financial institution. So that's a key. That's very important. You want to
Mhm.
build and maintain a financial relationship with your financial institution, and usually it comes in the form of you having credit and maintaining it and consistently using it and taking care of it on time. Yeah.
Yeah. And interesting too, from the perspective that some people prefer paying cash for everything they do. But by doing so, they're not building that relationship with the financial institution. So they don't have a sense whether, no matter where that money comes from, in their mind is just like, I haven't seen you use it. I haven't seen you reimburse stuff. So I'm not sure whether you're managing or you just stumble upon money. Okay, so I
Ex-
get that portion.
exactly. Right.
If we're
Especially when it
looking at,
comes.
sorry.
Yeah, no, I was going to mention, especially when it comes time to when you're buying a house, right? Even when you
Mhm.
have a substantial down payment or a substantial amount of cash in your account, financial institutions still want to see your credit history, how you've managed credit in the past, how you've paid other borrower in the past. Because remember, right, a mortgage is a substantial amount. It's a long term. So,
Mhm.
a lot of banks are hesitant to just give anybody a mortgage because they want to know, okay, if we give you this amount, we want to see what is your past payment history. So that's when really credit comes in. It kind of gives them an idea how you were able to manage debt in the past and how you're going to manage this debt moving forward.
Okay. So, two things we want to know about because we're new to this game. What is a credit report and what is a credit score?
Okay, so a credit score is a three-digit number. It ranges from 300 to 900 in Canada, right? So basically, a credit score, what it is it's a grading system, right? It's what lenders use to make informed lending decision whether to lend you, whether it's a loan or whether it's a car loan or a house,
Mhm.
based on your past payment history. So that's what a credit score really indicates. So the higher your score, the lower risk you present to the lender. The lower you score, the higher risk that you present to the
Yeah.
lender. So that's what a credit score really is. It's just telling lenders, okay, this person's credit is high, it's good, so that means they're a low risk borrower. This person's credit is too
Mhm.
low. they're low, they're a high risk score because based on their credit score, it means that, we can't really trust them with, this amount of money
Mhm.
because their credit score is telling us that, in the past, they did not manage credit wisely. So that's what a credit score really is. It's just a three-digit number that, lets lenders know what is your past payment history, how have you handled, bills in the past. So that's a credit score. It's a three-digit number from 300 to 900. 900 being an excellent score, 300 being the lowest score. Okay. Now, a
And what
credit,
would be
mm,
mid range?
so mid range is around 670, 680, right? So when you are, if
Okay.
you're around 70, 680, then that's the average, right? That's the average credit, right? That's the average credit range, especially in Canada. That's the average credit range. Right? Now, a credit report.
We oh,
So
okay. Go ahead.
So a credit report now is like your it's like a report card, for a report
Okay.
card, meaning on your credit report it has more of a detailed description what's on your account because a credit score is just a three-digit number from 300 to 900, but a credit report has more detail on it. It has your payment history, meaning that how many times you've missed payments. It has your all the different accounts that you've had in the past. It has your personal information. It has any collection accounts. So let's say, for example, you've missed too many payments and then you got sent to collection agency, a third party collection agency. All that is going to show on your credit report. If you've been taken to court, let's say a lender or a creditor sued you, all that is going to show on your credit report. So it's a more detailed description or profile of what's going on in your account in terms of accounts and how recently you've been paying, how many times you've been paying, and so on. So that's what a credit report is.
Okay. How do I or how does one find out about their specific credit score and how they can go about validating the information that appears there?
So to find out about it, right? So there's two credit bureaus in Canada. So there is Equifax and then there's TransUnion. So those are the two credit bureaus in Canada. Now, uh, one thing to remember is these credit bureaus, they're a business. They're a public business. They're not a government agency. They're not a nonprofit organization. These credit bureaus are a business. So they're in the business of storing your information and selling your information to lenders. So that's one thing you have to know. So these credit bureaus, they are a business. So Equifax and
Mhm.
TransUnion. So the way you go about validating your credit is uh, everybody in Canada, you're entitled to a free credit report every year, right? So every year you're entitled to a free credit report. So you can call either of these credit bureau, either TransUnion or Equifax, and request for your credit report. Now, when you get your credit report, it doesn't include your credit score, which is separate. For you to get your credit score, you're going to have to pay an additional fee for you to get that. But the credit report, which has all your information, your payment history, the accounts that you've had in the past, how you've, how many times you've been late, that one you can get it once a year from either of these credit bureaus. So you can usually just call them, and then they will send it to you by, you give them your address, and then they will just mail it to you. So that's how you go about really getting your credit report.
And that's how you'll find out whether the information they have is accurate or whether there's need to correct some of those elements.
Exactly. Now, here's one thing that a lot
Okay.
of people, one thing that a lot of people are not aware is this. Even though you're not checking your credit report, usually what ends up happening is this. There's something called a credit merge. So let's say, for example, you live in an apartment or a condominium, and your
Mm-hmm.
name is John Smith, right? And then there's another John Smith in that same condo or in that same apartment building.
Oh.
Now, usually credit bureaus, as I said, they're business, right? They're not really there to monitor what's
Mm-hmm.
going on in your credit report. They're just there to store information.
Mm-hmm.
So you live in an apartment building. There's two John Smiths in there. You have good credit. The other John Smiths has bad credit because you're in the same postal
Mm.
code, in the same building, the
Mix.
same street. What happened is, boom, there's a credit merge or a profile merge, and most people are not aware of it. And the credit bureaus, they're not going to call you to verify that, oh, are you John Smith A or are you John Smith B? It's just
Mhm.
right. So you end up getting this person's bad credit, and then one day you try to go to apply for a mortgage, and then you realize there's all these, and you're like, no, that's not me. That's right. So it's very important that you at least check your credit once a year, just to make sure, as you mentioned, to
Mhm.
validate that the account is actually yours. The accounts that are included in there is actually yours, because these credit merge, it happens very frequently because the bureaus, they don't monitor your credit, they just store information. So you want to take that responsibility of actually just just checking it, verify it once a month, once a year.
Mhm. So technically, it's every person's duty to
E-
validate that the information that's on the report is valid.
Every person's duty. The bureau.
Because when we think about identity theft, that means people can put in all kinds of things and you're not
Yes,
aware, and you
you know
think life is great until
exactly.
you to try and purchase something, and boom, you find
Yeah,
out the
you
information.
find out exactly. So identity
Okay.
theft that you mentioned, yeah, the credit bureaus, they're not going to call you and say, hey, somebody applied for credit under your name from this city or from this city. They're not going to verify that with you. You have to take the responsibility of actually seeing what's going on.
So now we've talked about the individuals. In terms of the lenders, how do they use the information from from the credit report? You've mentioned earlier that you started with a bad credit, and then within a month or something, you started improving that thing. So what do they do with the information?
So with the information, what they do is it could be like a lot of employers nowadays, they use your credit report to see, how you've managed credit in the past. So employment, right? If you're looking for a job, there's certain industry, they're very, you know, credit bureau sensitive, meaning that before you apply for it, they will check your credit report. Landlords will check your credit report to make sure that, hey, you are
Mhm.
a viable customer, or you're a profitable
Solvable.
customer. Yeah. And then banks and financial institution, mortgage. So every lender, depending on which industry. So if it's even insurance companies, right? Insurance companies will check your credit report to see what kind of what kind of a high, if you're high risk or you're low risk driver. So that, and then they will base that based on your in your premium. So that's why, right, different lenders use it for different purpose, whether it's to grant you a mortgage, whether it's to give you access to an apartment, or give you, provide you
Mhm.
with employment, or for insurance, or even buying a car.
Okay. What should one be aware of when it comes to choosing a credit card?
So, okay, so you want to be aware of the annual fees, okay? Because a lot of the time
Mhm.
is people get credit cards because they collect points, because there's reward points,
Mhm.
and some of these cards, they come with annual fees that you got to pay every year. So now, if you're not really using if you're not using these points, then it's pointless for you to get a card that
Okay.
has an annual fee on it. So that's one thing to be mindful of. It's the annual fee, because what ends up happening is this, because I've seen this over and over and over again. Somebody will get a credit card that has an annual fee, right? But they don't use their credit card. They just leave it there. Now, usually every year, a specific month, they charge you that annual fee. So they take the money from
Mhm.
your credit card, right? Now, when they charge you now, they will send you a statement, right, for you to pay that annual fee. Now, a lot of people, not knowingly, they're like, hey, haven't used my credit card in 6 months. So, I haven't done any transaction. But there's the annual fee that that gets charged every year. So once they charge you, they send you a statement, and then you forget about it, that, oh, I haven't used it. Then what ends up happening is this: you go into you miss a payment, right? You miss a payment, not because you used the credit card, but because there is an annual fee on it that you were not aware of, that you
Mhm.
actually have to pay. And once you miss that payment ends up going 30 days, 60 days, 90 days late, to a point where they close that card, and then
Mhm.
you get a derogatory, or a bad, a stain on your credit
Mhm.
report, showing that this person has been 3 months late, right? So be aware of the annual fee. Right? Don't just get a credit card
Yeah.
because the cash back, there's point. If you're going to get that, make sure that you're aware of the annual fee, and you're also aware of the amount, and also the date that they charge it every year.
Okay. Okay. Is that the only thing I should be aware of? Let's just say it's my first time. I've never had a credit card, and I, I don't know. I show up at Costco, and they say, "Oh, we have a credit card. Blah blah blah." It's worth it. Is there a difference between the cards that are issued by, I would say, department stores
Yeah,
versus the ones that are
that's right.
issued at the bank?
Yeah, so department, yeah, so that's one thing. You want to stay away from department store credit card, right? These credit card, because remember, the purpose of credit is for you to establish a relationship with your financial institution. Department credit card is usually given, from either Walmart or Costco. These department credit cards, they don't really establish a financial relationship with your, with your financial institution. Now, sometimes a lot of these department credit card, they don't even report payment history to your credit bureaus, right? So
Ah, okay.
department credit cards, you want to stay away from it, right? If you want to build credit, right? Okay, so if you want to, something that you want to be aware of when it comes to credit is, so the annual fee, also be aware of the interest, right? Be aware of,
Mhm.
know your due date once you get the credit card approved. Know your due date, and know your billing cycle. So your due date is the date that the credit card company will require you to pay the minimum payment every month, and the billing cycle is the date that the credit card company prints the statement. So, which means you have to have, the payment has to be in before the billing cycle. It's always good to make it before
Mhm.
the due date, but you got to be aware of that. You got to be aware of your due date, be aware of your
Mhm.
billing cycle, be aware of any annual fee on it. And whatever you do
Mhm.
not take out cash advance from your credit card, which means do
Oh,
not take out
okay.
money. Right? Do not take out physical money from your credit card. Do not go to a cash machine or ATM machine
Mhm.
and take out physical cash from that credit card. Cash advance it will get you in trouble, right? The interest rate is high. There's different types of fees that they charge. So stay away from cash advance, right? Taking money out from your credit card
Okay.
by inserting it to an ATM machine. That's one form of cash advance.
Okay. Thank you. Another question I have: what are the types of purchases that one should not use credit cards for?
So with purchases, so there is really there's no limit in terms of purchase. The only thing is, right, if you purchase something, just make sure you pay it off in full, right? Either you pay it off in
Okay.
full, or 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 by law, or according to the credit card company, make at least pay up the minimum payment. But the key is you want to pay off the credit card in full, whatever you use that purchase for. You'll pay it off in full once you get it. If you're not able to pay it off in full, at least pay half of it. But right, but there's, yeah, so because credit card is really meant for purchases to build your credit. So I wouldn't say, right, like there's really no, like people use it for everyday purchases, right? They use it to buy their grocery, to put gas, to
Mhm.
but just don't buy a car with your credit card if you have a high credit limit, right? So that maybe that's one thing, right? So but in terms of purchases, really, you can pretty much buy anything, but just make sure you're paying it off in full every month.
I'm asking because let's just say in this current economy where a lot of people have lost jobs, the revenues are not coming in as expected. Some people might be tempted to take that credit card that they barely used and say, okay, either pay the mortgage or put the car payment on this or whatever it is.
Yeah. So
What is
when you
the challenge in doing this?
So the challenge is this: when you pay remember I mentioned that stay away from cash advance, right? So if you're paying your mortgage with your credit card, that's a form of cash advance, because what you're doing is
Mm,
uh, you are you are writing checks. It's called access checks, right? You're writing a check against your on your
mhm.
credit card. So that's something that you want to avoid. That's a cash advance, right? It's,
Yeah.
the fees is too high. the interest rate is too high, you start paying interest on that cash advance immediately. So maybe that's something that you want to stay away from. Any cash advance, writing checks on your credit card, which is right paying off your mortgage. So if you're paying off your mortgage with your credit card,
Mhm.
you're writing a check and you're sending it to the bank. That's a cash advance. So you don't want to do that, right? You don't want to do that. Yeah. So now, if you haven't, now here's the thing that you want to be mindful of, right? If you haven't used, especially now in this time frame during the pandemic, a lot of banks are being very they are monitoring people's credit use very carefully, right?
Mhm.
Because of the pandemic, a lot of people are not working, and especially people that own their own houses that took the mortgage deferral program, the deferral program, and it has just recently come to an end, which means because a lot of people are not working, and because the economy is still slowed down, so a lot of people are going to start tapping
Mhm.
into their lines of credit, credit card to pay their mortgages and so on. So
Mhm.
the banks right now, they are being very, very watchful. They're watching people's credit usage. So if you haven't used your credit card, let's say in 6 months, and all of a sudden you're using, you are charging high, high spending on it, your account will most likely end up in the risk department, because the banks are looking at that as a, that's an unusual activity from this person, right? The
Mhm.
behavior is not right. They haven't used their credit card in 6 months, and all of a sudden now they're using up large amounts, 3,000, 5. So you want to be careful on that aspect of it, because it will end up on the risk department, and once the risk department gets it, they will review it. They will check your credit bureau to see if you're doing the same thing with other credit cards, and then eventually
Mhm.
it would just close your card.
Okay, so let's just say I'm the person who has lost their job, or let's just say I used to work mm, 45 hours a week and now I'm down to 20.
Mhm.
Then this is not a good idea to even consider touching my credit card,
Yeah,
because it's going to
mhm.
create challenges, and it's
Ye-
going to alert some people's attention and then make it more difficult for me to address this. In this situation, let's just say I have a mortgage. It's better to refinance my mortgage than look at using credit card to pay off the bill, right?
yeah, like stay away from using credit cards to pay off any form of if you're doing cash, yeah, writing checks on your credit card, yeah,
Okay.
stay away from cash advance. Anything that, if you're taking money out of your credit card, which is a cash advance, balance transfer, if you're using your credit card to pay other credit cards, that's what you call a balance transfer. So you want to
Oof,
stay away
oof,
from
yeah.
those, yeah, those activities, because those are the
Okay.
activities, and it will
Because
hurt
you've
you in the long run.
mentioned paying one credit card with another one, what's the maximum amount of credit card we're allowed to have? Is there a maximum we're allowed to have?
So there is really no maximum that you're allowed to have. You can have as much as you want. The only thing is, so let's say if you are buying a house, let's say if you don't have a house and you want to buy a house, and you have all these credit cards, right? You have, let's say, 50 credit cards. Usually what ends up happening is that when you go to to a financial institution or a mortgage broker, they will tell you that, listen, you have too much available credit. You need to close some of these credit cards off, because they
Okay.
see that as high risk. It's like, this person has so much credit card. We don't know if, right, if they're gonna be able to, like, you become a high risk borrower. So, um, yeah, so you want to, yeah, so that's something
You
that
want to be
people want to,
watchful.
yeah, you want to be watchful of. Yeah.
So let's just say for some reason I'm in trouble already. So my credit is not that great.
Hmm.
How do I go about improving my credit score? Even if it takes a little more than a month, because I think a month is very, very good, but I wouldn't say that's the reality for everyone in out there,
So when it
especially
comes to,
during the pandemic.
yeah, so when it comes to credit, right, there's four groups of credit profiles. So you have people with no credit history, you have people with
Mm-hmm.
limited credit history, right? You have people with poor credit history, and then you have people with established credit. Now, somebody who has
Mhm.
no credit history, it means that they're not in this credit system. They've never had a credit card. So
Mhm.
their approach to fixing their credit will be different than somebody who has a poor credit, who somebody has limited credit. So a person who has no credit history, for them to improve their credit, they just need to go and get a secured credit card, right? Get a secured credit
Mhm.
card with any lender. Now, because they don't have any credit history and they're not in a profile, a secure credit card is a much easier route because it's meant for people like that, for people that have no credit history. Now, a person that has limited credit history, meaning that they've used credit in the past, but they stopped using credit, right? So maybe they had a credit card 5, 10 years ago and they stopped using it. So they have limited credit history. They have limited activity in the credit bureau. So somebody like that, they just need to go and get a unsecured credit card, right? So an unsecured credit card means that, they don't have to put any security deposit. They don't have to put any collateral because they already have a credit history, but they just need to, you know, basically, get it up and, generate more data in the credit bureau. So that's now the person who has poor credit history, what they need to do is the first thing they need to do is they need to check their credit bureau first to see what is the reason that they have poor credit history, right? Because it could be different reasons. It could be late payments. It could be a collection account that's showing. It could be, it could be their utilization is too high, meaning that they're using too much of their available credit. So let's say they
Mhm.
have a credit card of 5,000, right? And they are using, they're maxing it out, right? They are at
Mhm.
4,000. That means they're using too much of their available credit. So that means they have to pay it down. So a person with poor credit history, first thing is you got to check your credit report, see what's there, see what's actually causing, you having poor credit. And from there, they will know that, okay, it's a collection account. Okay, I got to get rid of this collection. Oh, you know what? My my utilization is too high. That meaning that I'm using too much of my available credit, right? So it really depends on where you fit in, right? That will depend on your approach to fixing your credit. Now, for people that have, let's say for people that have limited credit history, if you only have one credit card on file, and because of that credit, because of that credit card, your credit is bad. It means that, let's say you don't have any other. There's nothing else that's, there's no collection account. There's not. It's just one
Mhm.
credit card, and that's causing you bad. So somebody like that, all they need to do is they just need to pay down their credit card, right? It's the utilization that's really right? That's hurting their score. So once they pay down their credit card, then they should see their credit score go up in the next 30 days because that's how long it takes for your credit card company to send that information to the credit bureau, right? So once they send that information to the credit bureau, it will update, then they should see their credit score increase.
You, in your answer, you mentioned secured credit card versus unsecured credit card. Can you give a
Y-
little more
Yeah.
details on those?
So a secured credit card is meant for people that are new to credit, that are establishing credit. So these are people that have no credit history, right? They have no credit history. They've never had any credit that's showing in the system. So a secure credit card would be much easier for that group of people to get because secure credit card basically is you putting up, let's say, the credit card company will ask you for, okay, if you give us $50 cash deposit, we will give you a credit card that has a limit of $250. So your total credit
Okay.
limit is $300, and the $50 is your security
Yours. Okay.
deposit, right? So you have a
Okay.
right a credit limit of $300, but really they gave you 250 because the $50 is
Okay.
yours. So that $50 is the deposit that you made. Now, after a while, once you've demonstrated that you can make payments on time, then they will refund back that security deposit. So that's a secure credit
Okay.
card. An unsecured credit card is there is no, the bank are going to ask you for any security deposit. They're not going to ask you for you to put any collateral or anything. They'll just give it to you
Mhm.
based on your credit history, right? Based now, usually unsecured is it's good for people that already have credit or limited credit. They just want to, generate more data, or they want to get more activity on their credit bureaus. So those are the difference between secured and unsecured. Secured, you got to put in a security deposit, and unsecured, the banks will not ask you for any security deposit.
So I'm going to dig a little deeper and I'm going to ask, what is the hardest lesson you have learned in terms of building or maintaining one's credit? And it could be learned from your own trials and errors, or it could be from seeing other people do certain things.
So one of the hardest lesson is, you know, it takes time to build credit, right? So which means to start with credit, you have to check your credit report, right? If you don't check your credit report from these two credit bureaus, Equifax and TransUnion, you will never know exactly what step to take first. So that's one of the hardest lessons for people is they never check their credit report. They think they have bad credit. They think, they've never checked it, right? They think, oh, you know what, I think I have bad credit. But really, when they say bad credit could mean different things. It could mean that their utilization is too high. They have a collection account. They just need to call this collection agency to remove that collection on their credit bureau. So the hardest lesson really is taking that first step to checking your credit, because that was one of the hardest lessons for me. Is it took me a while, even when I lost that job opportunity with the financial institution, because they told me I had bad credit, but I never actually took that initiative to go and check my credit. I just went about my days. It was like, oh, you know what, so so right. So when somebody tells you that you have bad credit, you have to take it upon yourself to go check your credit report to see what they're actually what are they saying, like what is it about my credit that's bad. So that's one of the hardest lessons, is that people just don't check their credit report, right? And it's free, as I mentioned. Every year you're entitled to have one free credit report for free.
You mentioned check your credit report with the two companies. So I can't just go to Equifax or TransUnion. I would have to go to both companies to get the information.
You're going to have to go to both companies, because what happens is these two companies, as I mentioned, they're a business, they're a publicly traded company. So they don't share
Yeah.
information. So whatever information is showing on this credit
Ah,
bureau is not showing on these credit bureaus, right? So you have to check it from both, right? Because sometimes what happens is this: a lender will only check your credit report from one of the credit bureau. So it
okay.
might be the credit bureau that that has, because sometimes the score is different, right? This credit bureau, TransUnion, will have a different score than Equifax. They will have
Mhm.
different accounts that's showing. So that's why you want to check both of them, because they don't share information. They do not talk to each other. They
Hmm.
are two separate publicly traded company. They are a business. They do not talk to one another. They don't share information.
Okay.
They're just so yeah. So you have to check it from both of them.
So that one stays with me because let's just say I would have never thought of asking both places. I would have just asked one company to give me the information and assume that they all have. It's like
Yeah,
you're going to the doctors and your
yeah,
information, whatever on the system, at least on the Quebec side, and you just assume everybody has that same information.
yeah.
But what
No,
you're saying for the credit card, it is not the same way of
no, it's
looking at
not.
it.
It's not the same way.
Okay.
Now, another thing is this: when you actually call, let's say you call one of these credit bureaus, let's say you call Equifax because you want to update your information, right? Even Equifax will tell you, "Hey, we can update it on our end, but make sure you call the other credit bureau, which is
Yeah.
TransUnion, to also make sure that they will update it as well, because we're going to update it here on our end, but right, you gotta also call, yeah, yeah. So they will tell you that it's like, hey, right, yes, we can update your information here, but you gotta call the other credit bureau to do the same thing.
Hmm. Thank you for that information. So we're kind of coming to an end, and I had one last question for you, which is what would be one key message you want to leave with our listeners with
So
respect to managing their credit?
yeah, so I think one key is you got to be intentional about your credit. You got to actually, you know, um, take the step to 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 safeguard it, to manage it. So if it means you having to check your credit report once a year, or if it means you for a credit monitoring system from these credit bureaus, either TransUnion or Equifax, because you want to make sure you know exactly what's going on your credit report at every time. Because as I mentioned, these credit bureaus, they're not there to monitor what's going on your credit profile. They're
Mhm.
just there to store the information. So you could have, as you mentioned earlier, identity theft. Somebody could steal your identity and start applying for credit from
Mhm.
different finance, and they're getting rejected and getting rejected and getting rejected. But that's impacting your credit, right? You're getting what's known as inquiry, hard inquiry on your credit report. But the credit bureaus, they're not going to call you. They're not going to tell you, hey, listen, there's somebody who's applying for credit on your behalf. We just want to make sure that they're not going to tell you that, right? So so which means you have to do that on your own. You have to
Mhm.
make sure that at least every either 3 months or every 6 months, just check it to make sure that there's no credit merge, there's no profile merge, because as I mentioned, credit merge or profile merge happens very often where somebody, you have the same name as somebody else, and then they end up merging that credit profile together, and now you have that person's credit profile. So you want to check that just to make sure that everything, all the accounts that are listed in there, it's actually yours, and it belongs. So that's one. You got to be intentional about your credit. You got to treat it as if,
Mm.
yeah, and be intentional about it. Really take the time to check it, to you can even set up some alert with these, alert. There's if you buy, if you get their monitoring service, you can set up alert whereby if there's an activity on your credit report, they'll
Mhm.
send you. You see, they will only send you an email, or they will only notify you if you have the paid service with them. But if
That's
you don't
right.
have the paid service with them, they will
Mhm.
not notify you to let you know that there's an activity on your credit report. Was this you? So you see, so that's why you have to really. So that's one lesson I would say, that be intentional about your credit, right? Because credit is, it's all around you, right? It's when you're buying a house,
Mhm.
when you're buying a car, when you're getting a job, when you're when you're getting an apartment, right? It's it's really, it's,
Mhm.
people don't want to deal with it, but it's there, right?
Yeah.
It's there. It will always be there. So you might as well just be intentional about it. See what you can do, because, right? Yeah, it's there. You don't want to miss a job opportunity because you have bad credit,
Yeah.
because you missed.
And
Yeah.
I really like what you're saying because most of the people I know who are experiencing financial, what I would call it, insecurity, the first thing they want to do is stay away from finding out what the problem is. And that's where it usually gets you in trouble because you let it go for so long that it's hard to, because I think you can only correct information for a year. You can't go back 5 years to correct information that's on your credit report.
No, you can actually correct
So,
any information that's on your credit report, whether it's a
oh,
year, five
okay.
years, 7 years ago, you can still correct it, right? You can correct an information, especially if it's not accurate, it wasn't authorized by you,
Okay.
right? If it's
Okay.
a wrong account, so you can go back as 10 years to correct, because that information stays on your credit report, right? It's there, right? If
Mhm.
it's not yours, if you want to correct it, so you can go, yeah, it could be something from 3 or
Oh,
5 years
see,
ago, you can still
that's two
correct.
things I've learned today, which is you, at least for me, it was a portion about the two credit card bureau, and then this one where you can correct the information and there's no time limit for that. So therefore,
Yeah,
and I'm sure right now, because so many people have actually either lost their jobs or one of the spouses has lost their job, the challenge is how do we manage the information that actually creates the challenge. And some of it could be okay, now because we're in this situation, it's now or never that I want to make sure the information on the credit bureau is accurate, because if I need to renegotiate something with the bank, I want to make sure there's no
Nat,
information there
yeah,
that could be dangerous for me.
yeah,
Okay,
exactly. Yeah. And it takes
thank you.
time. Yeah. And it takes time to actually dispute an incorrect information. So that's why you want to get ahead of it ahead of time, because The credit bureaus, the way they work is, they go back and forth with you. So if you want to correct something, they will give you the runaround. So you call the credit bureau will tell you to call the credit card company or the creditor. You call the creditor is going to tell you to call the credit bureau. So they give you a runaround, right? They will. So that's why you want to get on it, like,
Stay on top of it.
stay on top of it, because especially if you in the process of buying a house and that house is closing in a few weeks, and then the bank tells you, hey, you got to go fix this. It takes a while for the credit bureau to update that information. You're looking at about, maximum, 30 days, right? That's how long they have for them to investigate to see if that information is,
Okay.
it doesn't belong to your account. So that's what you want to stay ahead of it, you know, ahead of time.
Okay. And to me, that's totally relevant from the perspective of ensuring that you know what's in there. Because sometimes the not knowing gets you in worse situation than knowing. Okay, this is the issue. How can I work with it and correct? I'm seeing a lot of youth. And not to give the sense that every youth does this, but they're using credit cards as a debit card, but they're not paying at the end of the month from the
Yeah.
perspective that, oh, they only asked for $15, I use
Yeah.
400, and you're
Mm.
like, no, it's getting you into trouble. So it's
Yeah.
understanding that what the credit it means and how it might impact your future decisions, because there's things you do when you're young and I just want a new phone. But if you're paying your new phone $700 on your credit card, you're gonna have to pay it quickly, because by the time, if you only pay $15, by the time you pay off that phone, you might have paid, technically the amount you've paid is like 3,000, if not more.
Yeah.
So it's
Interest. Yeah.
understanding those realities.
Yeah, that's why. Yeah, compound interest. People, when you use a credit card, you got to pay that
Yeah.
off immediately, or when you have the opportunity, the funds to do it. Right? Don't let it, because yeah, that interest could really, especially nowadays, a lot of these credit cards, the interest rate is at 22%, 20.
Yeah.
So that's one thing. Yeah, you got to pay attention to you got to be mindful of the interest rate that the credit card company is giving you. Right? So
Because I think I was reading not too long ago that as Canadians, we used to be less in credit debt than the Americans, but
yes, that is
we're
true.
slowly getting more like our neighbors, because
Yeah.
I know people, family members, friends, that you would open their wallet and there's like seven, eight, nine credit cards, and I'm
Okay.
like, how many do you
Yeah.
need in order to
Yeah.
to do whatever it is that you do? And that's the portion where the more you have, the more interest, the more challenges, the more
Challenges. Yeah.
cycles, the more blah, 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 which makes
Yeah.
it hard to stay on top of things.
Exactly. Management. So you got to know the billing cycle, the due dates for all these credit cards, right? And if it has an annual fee,
Mhm.
you got to know the date that they are charging the annual fee, and you stay on top of it. So the more credit card you have, it requires a lot of management, knowing exactly
Yeah.
what is the fee for this, what is the due date, or a solution is sometimes, right. You can put your credit card on auto pay or auto payment,
Yes.
whereby the credit card company will take at least a minimum payment, or you can tell the credit card company to take the full balance every month. So if you use
Mhm.
$100, you can tell them, hey, I want you to automatically take that $100 from my checking account. That helps to prevent your credit card from
Mhm.
from you missing payments, right? Because missing a payment can drop your credit score really, you know,
Quickly.
yeah, very quickly. Yeah.
And I like what you're saying about that option, but that only works if you're not utilizing your credit cards. Because if you're using your credit card for all kinds of expenses, especially now that we're getting, let's just say we're just past the Black Friday and then
Yeah.
Christmas coming, this is where people sometimes, because the money seems to be easy to get, you might end up over purchasing things that you might not even remember you had gotten. I remember this person telling me one year that they've purchased a gift, something rather expensive. We're talking about around the thousands, and they only remembered they had purchased this somewhere around July or something like that, which means you've purchased a high ticket item that was meant to be a Christmas gift. You completely forgot about it, and then blah. It's like, really? So it's like
Yeah.
wasted money. So it's
Yeah.
those elements, and sometimes it's understanding how the credit works so that you're not in challenge putting yourself at additional risk.
Yeah.
Thank you.
No
Thank you
problem.
very much for this conversation. I know it has helped me. I don't know whether it has helped anybody out there, but this is the portion where if you've never done or paid attention to credit, I would say there's no better time than start today,
Yeah. And
because
because
that might determine some of your choices later on.
yeah,
Go
because
ahead.
it takes time. It takes time to build a credit history or credit profile. But one late payment, that's all it takes to damage your credit history overnight. So that's why you want to get on top of it, manage it, right? Because that one late payment, you build, let's say you build your credit profile for years, 5 years, you miss one payment, that could just damage you. So that's why manage it properly, understand it, so that way you don't end up in the situation where your account is going to collection, you're missing payments, and it's damaging because it's stressful, right? When you have,
Oh yeah.
it's very stressful when when you can't get something here because you have bad credit, you can't get an apartment here, you can't get a house, you can't get a car here, you're losing a job here because it gets really, really stressful to people. So that's why to avoid that, you have to understand it, manage it, understand, make it intentional. It's like, I want to know how this credit works, how credit card works, how credit reports, credit profile, so that way I can avoid, getting into that situation in the future.
Yeah, because it gets into a vicious cycle very quickly.
Very quickly. Yep.
So thank you very much. It's been a
Not a
pleasure having this conversation with you. I don't even know. I'll have to check whether my kids, my young adults, should I say, were listening, because some of it could apply to them. I'm just saying. I'm not putting anybody out there, but it's just the sense where sometimes you just don't think about those cycles, those due date, and whichever. It's okay. I'll pay it, but it's not the I'll pay it. It's when is it due and what does it create. So on that, thank you very much.